lot of Americans only own US stocks because that's the stocks that they're most familiar with. They're the household names that they've grown up with, whose products they use every day, that they hear about in the news all the time. Unfortunately, US stocks don't give you full access to the growing global economy. In some cases, multinational companies that are based in the US do have exposure to fast-growing emerging markets, but they don't always have the most competitive positions there. If you leave out international stocks, then you're missing out on a huge part of what's driving growth throughout the world. There are several multinational companies in the US that have increasingly gotten more of their business from overseas. A great example is Yum Brands. You may not know the name Yum Brands very well, but it's the name behind fast food outlets like Taco Bell and KFC. Surprisingly, Yum Brands hasn't produced very much growth in the US lately, but where it is growing quickly is in China. That increasingly is what is hinging Yum Brands' success in a rising stock price, whether China will be able to grow as quickly as it has in the past. International stocks can help you diversify your portfolio, although some people question whether they provide as much diversification now as they did in the past. There are several ways to get exposure to international stocks in your portfolio. One is simply to buy them on US stock exchanges. There are several stocks that allow you to get exposure to their stock by buying it on a US exchange, one example of which being BP. Another way to buy international stocks is through an exchange-traded fund. Increasingly, there are many exchange-traded funds that focus on international stocks that you otherwise couldn't buy on US exchanges. One such ETF is the Vanguard Total World Stock. It gives you exposure to foreign stocks from around the world. In addition, if you want to be sophisticated and go directly to foreign exchanges, an increasing number of brokers will allow you to do that. Some of the brokers that allow you to do that include E-Trade and TD Ameritrade. It used to be extremely costly to invest directly on overseas exchanges. Those costs have come down, but you still have to be careful to look at the commission structures that those discount brokers offer. Often they won't be the same as the commissions that they offer for buying US stocks. One risk that you introduce into your portfolio when you start investing in international stocks is foreign currency fluctuation. With some international stocks, especially those that do business around the world, this isn't so much of a factor because they earn their revenues in so many different currencies that movements in any one of them doesn't make a big impact. However, with companies that are mainly focused in one particular area, currency risk can be much more appreciable and should be something that you pay a lot of attention to in making an investment decision. Unfortunately, many US investors never end up including international stocks in their portfolios at all. But over the last decade, those that did include international stocks saw much better returns than those that relied solely on the US stock market. Going forward, owning international stocks is equally likely to have a positive impact on your overall returns.